talked with Roy Smith Wednesday about corn and soybean markets. Tight domestic supplies have many eyes to the south in Argentina and Brazil. But since the 2013 South American crop is just going into the ground, the waiting game has months to play out. Roy mentioned there's currently an inverse in soybeans, which could be a bullish indicator, even at $15 a bushel. In regards to the dead cat bounce, when we met on Wednesday afternoon, Roy said the market was doing exactly what it was supposed to be doing.
The day we taped this, the soybean market was up 17 cents on November futures, and that puts the dead cat bounce at 80 cents a bushel so far off the harvest low in 6 days. So we have a little bit left, I think.
We'll talk about the dead cat bounce a little bit later on. You mentioned there's a big inverse right now between November or December and then getting into next spring. Explain to me what that means, what you think it could go to.
Inverse means that the nearby futures are higher than the deferred futures. So that means November futures are higher than March, they're higher than May, and so forth. That is usually a bullish indicator, and the bigger the inverse, the more bullish it is. And right now we have an inverse of about 80 cents from November to July. So that historically is about as good as it ever gets. There was one year back there in 2003, 2004 where it was about where it's at now. So that, you know, that's very positive.
The devil's advocate to that would be it's bullish now, but for how long?
Well, yeah, and you look at the deferred months, March, May, and July, and each one of those is a little lower. And why is that? Because there's another crop coming in Brazil and Argentina. And the market knows that, and the market is saying, sell your beans now, we need them now. The catcher is that chances are, if they need them really bad now, they're going to need them even worse in January, because there won't be any new crop beans in the southern hemisphere until March.
And corn's kind of on the other side of that. It's not as strong, I guess.
It's not as strong. There is a slight inverse in the corn market. For the next 2 delivery months, not so much, but then 7 or 8 cents. So yes, it's there. Yes, it's a little bullish, but not jumping up and down bullish like the soybeans are.
Do you think there's less corn available on farm? I mean,
the commentaries that I read say that the reason the market is doing what it's doing is that we just don't have the demand for corn. The demand rationing has taken place for corn, and you know, here, as far as I'm concerned, here in Cass County, Nebraska, there's very little corn went into bins at harvest time. Most of it went to the elevator for the purpose of having a real good, accurate record for crop insurance purposes, and I think a lot of that got sold. If it did, why, we could see some tightness in the corn market, but it'll probably be April, May, June in that time period.
Let's move back to the dead cat bounce. We're still in the beginning stages of it, but still a ways to go.
I look at how much bounce there is in the price and how many days. Well, as of the day we taped this, there's 6 days, so we probably got at least 4 more, or from the weekend probably at least 2 or 3 more, and $1 a bushel off the harvest low. Now, if you want to go percentage-wise off the harvest low, it's about $1.33 or more. So you kind of look at your absolute cash price, look at how much of a crop you had, and what your cash flow needs are, and make your judgment call there. I've been kind of bullish here today. It's probably no big secret, but I would not try to discourage anybody from selling $15 beans. I mean, all of our lives we've heard beans in the teens. Well, today we have it. What are you going to do about it?
I told you before, I think that's the sentiment, though. I think popular sentiment is, let's wait a little longer. We still have some time here. The window is still open until South America goes. But do you think that's a little risky?
Well, no question that there's some risk in it in terms of what could happen.
Right.
The other side of that is what probably will happen. And I'd say we probably have at least till the end of the year to take advantage of beans in the teens, and you know, that's no guarantee. I wish I could. If I could, I would, but you know, you look at all those factors and make your judgment call. And I would say it's going to be nice this year because it looks like the price might go high enough to offset the loss we had in yield. I mean, I talked to some people who farm in dryland areas that were talking 20 to 25 bushel soybeans and 70 or 80 bushel or less corn. And if under those circumstances, you need to bounce.